Hello and welcome to Crypto Weeklies. Today let's talk about Ethereum. Ethereum is right now the biggest narrative related to crypto. This is our word cloud, looks at last 7 days of narratives scraped by our machine learning algorithm, looking at YouTube and X related content related to crypto. The biggest narrative, it's kind of a split between Bitcoin and ETH right now. The size determines the relevance or the right now the attention related to the narratives. The ETFs which are recently launched related to ETH are also garnering some attention. Apart from Ethereum and Bitcoin, the bullish sentiment is back in the market over the last 7 days, although the recent crash has dampened some of the spirit. Again, this is last 7 days worth of running last 7 days worth of narratives. You can see some bearishness is over here, but mostly bullishness. Again, launch related to Ethereum ETFs, as well as discussions around BlackRock, some of the other popular altcoins such as Solana, XRP, some related Cardano, Polkadot are also being discussed. Now let's focus our attention on Ethereum exclusively with its right now. Let's look at the ETH risk. This is normalized between 0 and 1. This is price versus simple moving average, the 20-week simple moving average. This is not again, the key idea with this analysis is that when Ethereum's price is too far gone to the upside from the 20-week simple moving average, the likelihood of it being a short-term bubble is very high. So for example, in May 2021, when the simple moving average was too far away from the price, that again was a topping signal. Similar to November 2021, the values will not exactly be the same, because again every single time the distance between the simple moving average and the price won't be exactly the same. That's why the key idea is wrapping a band around it. So for example, when the normalized risk is between 0.8 and 1, that is the highest risk. We came really close during March 2024, when the risk was at 0.81. And if you want to compare the price at that point in time, during March 2024, the price was at a weekly average was at around 3800 USD. Again, you can see over here the peak per this one was March 11 2024, which would be the week just following this, when the price action was at around 3800 USD. That's the key idea with analyzing the short term bubbles. Right now the price of Ether is in a territory where it's not it's not in a high risk or nor in a low risk environment right now. The risks associated with ETH, it's over here, as of yesterday is 0.41. The band is at moderate risk between 0.4 and 0.6, although we went to low risk territory at around 0.28 risk back in July 7th of 2024, that is 2 weeks ago. And if you want to check, the price at that point in time was at around 3170 USD. Right now, thanks to the recent crash, the price of ETH, you can see over here, if you want to check it, the price is at around 3170 USD, kind of similar level as it was in around first week of July. Per our AI based forecast, that's where we are going to focus our attention. This is average weekly price of Ether going back as beyond as about November 7 2017. So about 7.5 years worth of data, and analyzing the price, and feeding those trained data to the machine learning model. We come up with 3 scenarios for ETH. One is the base case, one is the bull case, and the other is bear case. Trained on the machine learning algorithm. This is again not financial advice. The base case scenario for ETH going forward is between 3200 to about price to about 3750. I know that today the price is lower than the base case scenario at around 3177. That's the reason we have this bear case also in mind. For each week, the bear case, that is for this week, the bear case is at around $3,050, again about $120 below the current price. And if you were to assume that there would be a further pullback in the later part of the year, the bear case scenario for ETH is between $2,200 and $3,000. This is at 68% confidence level. That means if you were to ask the machine learning model with a 68% certainty, can you tell me what could be the price going forward 6 months? The theoretical floor is between $2,200 and $3,000. The base case between $3,300 and $3,750, and the bull case between $3,600 going to $5,980, almost $6,000. That's the bull case at 68%. But if you want an increased accuracy of 95%, then that becomes both the bull case and the bear case get amplified, because again, if you increase the certainty, ask the model to increase its certainty, the range will get expanded to accommodate any fluctuations either to the upside or to the downside. The base case stays the same. The bull case in that scenario, that is at 2 standard deviation or 95% certainty, is within $3,800 and $9,000 for ETH till the end of year 2024. The bear case is between $1,280 to about $2,800. Again, that's where a 2 standard deviation floor would be for ETH. Going to the ETH's retirement related compound annual growth model. Again, all of these charts are available on this website, cryptoweeklies.com. You just have to check out over here. So for AI based forecast, the CAGR, which is the retirement related model, all of them are available for you. They get updated every single day, the relevant ones, that is. And this website is available for free. You don't have to pay or sign up for anything. So the base case for Ether, assuming that Ether stays alive for next 15 years and grows at about 15%, which is again really a conservative approach. Ether has made 15% moves not too recently in a week. So extrapolating at a 15% CAGR yearly level is, again, we are being really conservative with this approach, again, because there are years where Ether goes up, and there are years where Ether goes only down by about 60-70% in 1 year. So just to normalize all the behavior, 15% is considered a realistic scenario. Again, there are approaches where we consider 22% as well, but let's get started with that 15% approach. If Ether manages to grow at 15% for the next 15 years, one ETH could be priced at around $30,000. Again, this is assuming that the inflation rate stays the same. Again, there are instances where Ether has become deflationary, so this again might be slightly more conservative. So a 30k ETH with a diminished inflation could be at around 50k or 40k in 2040. That is, again, and if you are considering 2040 as too much into the distance, then you can check out at 2036, 2032, or here 34, or here at 13k. And on the red line, it tells you the number of ETH token without staking needed to be a ETH millionaire. So in 2040, a 32 ETH, again, coincidentally, the amount of ETH that you would need to stake as a validator, that amount would be worth at around $1 million. Again, none of this is financial advice. If on the other hand ETH manages to grow at 22% instead of 15%, one ETH could coincidentally be valued at around $74,000. That is, again, close to Bitcoin's current all-time high. That is the beauty of exponential models at an exponential growth, 22% year over year. Ether has done that, more than that, about 60% it has done over the last 7-8 years that it has been alive. So again, ETH extrapolated to 2040, 74k becomes one of the optimistic scenarios, and the number of ETH needed to be a ETH millionaire would be around 13.5 without staking ETH. So this is the retirement model. I wanted to update one more thing before we go is the ETH's current risk level, how they have dropped down. This is the Ethereum price color coded based on the SMA risk, as we shared in our prior analysis over here. This is just applied to the ETH's price action, the current risk level at around 0.34. Again, moderate to low risk compared to what its historical price action has been. The key idea with this is closer to the peak as it was in March of 2024, when the risk levels are above 0.8, DCAing out of the market makes more sense. Similarly, when the risk levels are at 0 and between 0 and 0.2, DCAing in the market makes more sense. So that's the key idea with this one. And one more analysis, similar analysis, is the dollar cost average related model. This is the price of ETH wrapped on a polynomial regression function, where the relationship with the price and time is not linear, but again there are phases when price goes down with time and there are phases when price goes up with time. We are in a phase where the price has been going up with time, essentially starting late July of 2023. So the time to DCA per this model was whenever the price is below this regression band, again, and when the color is either this Dodger blue or purple, that has been the best time to dollar cost average Ether. Again, this takes into consideration time factor as well as diminished volatility. So we have the multiplier for that as well. And right now per this model, the risk level is at 0.26. Again, the third best time to DCA per this model. Ether has spent a lot of time in this territory between 0.2 and 0.3. So just wanted to highlight that. Just to summarize everything, Ether per the DCA model, risks are fairly low at this point in time. Per the SMA model, again the risks are dropping, coming to about 0.3. ETH as a retirement vehicle, if it manages to stay alive for next 15 years, the optimistic case is 74k for ETH. If it, on the other hand, it manages to grow at a moderate pace, 31k is a realistic scenario. On the other hand, the forecast, the AI based forecast at 2 standard deviation accuracy, the bull case between 3.8k to about 9k, the bear case between 1200 and 2800. That's the just a 68 percentile, 95 percentile, 95 percentile forecast. Right now the risk levels per the SMA model are at moderate levels, and definitely the attention is towards ETH at this point, based on our NarrativeCloud. So with all of this, I urge you to subscribe to this channel to stay updated on the AI based and data science based analysis of ETH and other major cryptos. We have all the charts for top 20 cryptocurrencies, similar charts that we showed for Ether, as well as some of the top 100 cryptocurrencies. We are continuously updating this website. So if you are interested in knowing the AI based forecast, topping, regression based analysis, dollar cost related models, please stay subscribed and give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.